Welcome to Talk Law Radio with attorney Todd Marquardt of the Marquardt Law Firm at marquardtlawfirm.com.
Welcome to Talk Law Radio. I'm Todd Marquardt. On the radio, on podcasts everywhere, on Facebook Live today, Saturday, February 14th, Valentine's Day.
Yep.
And we're going to do the financial focus. But first, I want to let you know what the theme of the show is. We're going to be talking about, is there a problem with non-citizens voting in federal elections? What is the current law about elections? I'm going to talk about the SAVE Act, which has passed the House but has not passed the Senate yet. We're going to review a section of the Constitution, discuss Governor Greg Abbott's opinions about the SAVE Act, talk about ICE removals and the Homeland Security budget. But first, let's check in with Joseph Warren, financial planner with Financial Planning HQ. They act as CEO for Successful People. He owns and operates Financial Planning HQ with his brother Jacob and his father Steve. So for the financial focus segment, we're going to talk about tax-free retirement.
Yeah, we're talking about a tax-free retirement. And it sounds kind of gimmicky, but I really want to go over how you can reverse engineer and create a tax-free retirement if you have a runway.
So what you're going to be talking about is if somebody's already retired, how they can use their money tax-free.
It's more for people who have some time to plan ahead. So maybe you have 5 years or more until retirement. But I definitely would encourage anyone to listen, even if you're already retired, because there are things you can do to make your retirement more tax efficient. But when you have a runway, you can really reverse engineer a plan where you utilize and fill up 0% tax brackets to truly create a tax-free retirement. It's possible, and we're going to break down exactly how to do that today.
Okay, well, tell us, how does that even work? Is it even possible?
Yes, Todd, it is possible, and I'm really going to break it down. So first, you have to think about what they call the 0% tax bracket. That's really made up of the standard deduction, right? So that for people who are single, I have the numbers here. I have them memorized, but $16,100 if you're single, $32,200 is the 0% tax bracket. And then you can get a little bit more if you're over age 65, right? There's a little bit extra that they'll give you at that point in time.
Mm-hmm.
But what you do is you fill up that tax bracket with pre-tax distributions. So that would be money like in an IRA, a 401k, money that's never been taxed. And when you take it out, it's completely taxable. So say you're in the 37% tax bracket and you take $100,000 out of a 401k, you would have to pay taxes on 37%. So $37,000 of that would be taxable.
Okay.
And that really gets to the heart of why tax-free income is so much more powerful than taxable income. So you fill up that 0% bracket or the standard deduction with your pre-tax money. So if you're married, say, you would take $32,200 out of your 401k, and you've effectively filled out, you have $32,000 of tax-free income.
Mm-hmm.
Yep.
Okay. So that's very interesting. $32,200 in tax-free income. But how can you get up to $133,000 for married couples?
Yeah, so today we're going to talk about how you can get to about $66,000 if you're single and $133,000 if you're married and tax-free income. So, it's hard to live off $32,000 nowadays, and we want to talk about how you can have a thriving retirement with tax-free income. And the way you're going to do that is you're going to exploit another 0% tax bracket. So we have that one, but there's also the capital gains tax bracket.
Okay.
If you're married, it's $98,900 in capital gains you can take per year, and that's taxed at 0%. If you're single, it's $49,150. So you add that up, right? You add up that $98,900 plus $32,200, and that's at least $131,000 in tax-free income that you could have in early retirement.
Wow, that's a lot of money.
That's a good amount, and actually, you could even get more than that, right? So if you're have money in a Roth, you could also use a Roth to add on top of that, and that's also tax-free. Or you could use reimbursements from past medical expenses that you paid out of pocket
account?
with the health savings account as well. So You could even get more than that if you need to, but most people are fine. Most married couples would be fine with 131,000, 133.
Depends on the lifestyle, I guess.
I guess, yeah, it depends on, the lifestyle you want to have in early retirement. But the point is that it is possible, but it takes planning to get there.
Right.
Is the point I want to make. And that's why I'm really targeting this towards people who have maybe 5 years or more of a runway until retirement. So we can really look to optimize how you're locating the assets in your retirement accounts or non-retirement accounts to create as much tax efficiency for you as possible.
So are you talking about 5 years before they take Social Security? Is that the retirement period that you're talking about?
I'm talking about just 5 years until you plan to retire, even if you plan to retire early.
What if I plan to retire when I'm 85?
Even then, the sooner. So there's a, I think it's John F. K. who said it, or John F. Kennedy who said it. It might be an ancient Chinese proverb, but the best time to plant a tree is 10 years ago, is the saying.
Right.
But the next best time is right now.
Okay.
So the sooner you do it, the better. Even if you are retiring now, there are things you could do when it comes to distributions, Roth conversions, to maybe not have a completely tax-free retirement, like the ideal, but to make it more tax efficient so more of the money stays in your pocket, doesn't go to the IRS. And, it can be used things like spending time with family, passing on to your kids,
Right.
instead of, however the IRS might use it, might not be as good as how you would use it.
Yeah, or making a difference in people's lives.
Yep.
Are there any other factors to keep in mind for this type of strategy?
Yeah, it also kind of speaks to Social Security, which is important. So this strategy of tax-free income in retirement works best if you can delay Social Security. And it makes sense to delay Social Security if you're in good health. So if you have a longer life expectancy, that's when it makes sense to do it. If you don't have a longer life expectancy, it's better to take it earlier. So your health actually, I think financial planners, a lot of people don't think about it, but your health has a huge impact on your financial strategy. I'm almost starting to think like there should be almost a health questionnaire when you're bringing in financial planning clients.
Right.
Of like how what's your life expectancy? So we can plan around that.
Right.
But the reason for that is because those provisional income tax brackets for Social Security, they haven't changed since 1983. So if you're single, you start getting taxed at $25,000 on Social Security of income, which is very easy to hit. That's a 1983 number. And if you're married, $32,000, you start getting taxed. So most people who are taking Social Security are going to have some taxation of that. So the longer you can delay that, the better. And you can use that time where you're delaying to put more money into the Roth. And then later on, you could use the Roth in the later stage to create a tax-free retirement. Because Roth distributions do not impact Social Security.
Right.
So I kind of, I wanted to show this complicated chemical here. I don't know if y'all can see it. This is vitamin B12. I used to work in an organic chemistry lab. I talked about that my first time here when I went to UCLA. When we were learning how to create complex chemicals like this, you work backwards. You reverse engineer. It's called retrosynthesis. So you say, this is the final result I want. And what's one step before this? What's one chemical reaction I could do before this to get, work backwards to simple reactants or simple chemicals to create this? And we can do that exact same thing. That exact same principle applies to a tax-free income. So if you want to schedule an appointment to map this out, you could just give me a call at 210-444-2128. And we would come up with the exact amount you need to have in each type of account: 401k, non-qualified investment account, right, for those capital gains distributions, and Roth IRA for the later phase of it. And then we would work backwards and say, these are the exact actions to take to create your own tax-free retirement. And even if that's not possible, even if you don't have the time, the runway to do it, to create one that's a lot more tax efficient than it would be just doing the default that everybody does.
Well, doesn't somebody that's age 25, for example, need to do that same thing?
25, I'm happy to talk to you. I don't know. I know it seems like the listeners here are not 20. It seems like it's like a little older adults. You may correct me if I'm wrong.
Right. No, that's demographic.
But
About
yes, if you're
50.
25 and you could put a lot of money into, you kind of think about it, you would want a lot of money in a Roth, a lot of money in a non-qualified investment account, and some money in an IRA, but just enough so that it would fill up that 0% bracket or the lower tax brackets.
Okay, well, thank you for joining us. Be sure to call Joseph at 210-444-2128, 210-444-2128 to schedule the tax-free retirement consultation.
Yep, I'm looking forward to talking
Happy
with you.
Valentine's Day.
Happy Valentines.
We'll be right back.
This has been Talk Law Radio with attorney Todd Marquardt, brought to you by the Marquardt Law Firm. You can learn more at marquardtlawfirm.com. And be sure to listen to the full Talk Law Radio show Saturday mornings at 11 on 9:30 a.m. The Answer.
Most families don't realize they have hidden legal blind spots until it's too late. Wills, trusts, Medicaid planning, even protecting a business. These are the kinds of issues attorney Todd Marquardt helps uncover before they become problems. Todd is the host of Talk Law Radio, where each week he guides listeners through the legal challenges families, veterans, and business owners face, while showing them the practical steps to protect what matters most. Catch Talk Law Radio, Saturdays at 11 a.m. on 9:30 a.m. The Answer, 6:30 a.m. The Word, and now in Houston on AM 1070 and 103.3 FM The Answer, or anytime on YouTube. Planning isn't just about documents. It's about peace of mind, security for loved ones, and building a legacy that lasts. Don't wait for a crisis. Do it before you die.